It is July 15, 2014. Current time is 12:18 GMT. Jay Meisler here with a daily Forex trading outlook. As I noted over the weekend, I mentioned the Canadian dollar's performance after data came out on Friday, and show how sensitive the market is, or hypersensitive it is, to anything that changes interest rate expectations. Well, we saw it again today with the UK, where inflation came up above expectations, and cable reverse course had an outside day here, and we're now pressing the recent highs. It shows you, first of all, it's a summer market. Number one, so liquidity is thin. Anybody betting has a low risk tolerance, but really it's all about interest rate expectations. And that brings us up to today's key highlight. We have a bunch of U.S. data, but the key is Yellen. Everybody expects it to be dovish. Anything other than dovish would be the surprise, and that's where the bigger market reaction would be. So far, she, especially after the recent jobs number, how she explains that away is another story. But then again, wage growth is still tepid, and that is maybe the key factor. But whatever the case, just be aware that news matters, and it's all about surprises. And you can see by the price action in, I said, the Canadian dollar, and then again in sterling, how sensitive the market is. As for the euro dollar, it continues to trade in that range I mentioned over the weekend, 135.75 to 137.50. It keeps trading around 136. This pattern's gone on for a long time. When it's broken, it'll give you a signal for the next directional move. You would think it's eventually going to be to the downside, especially after what Draghi said yesterday, and I will address that in an article later today. But for now, just Eurodollars in this range, more cross-focused than dollar-focused, and as such, 135.75 to 137.650 until broken. So that's it. We have U.S. data, but more important is Yellen. Keep an eye on what she says or what she doesn't say. The market is going to be hypersensitive, and it'll probably be very defensive going into it, but probably with a slight dollar negative bias, because the market expects it to be dovish. If we look at charts very quickly, I'm sorry I went on, but it's more about news than charts at the moment. Look at the 200, 400 period moving average. It's flat. Look at the 100. You got the 200 below, the 100 is above the 200, but look, that 100 is just about flat. 200 hour is tilted down. So really no change, 135.75, 137.50 until either side is broken. More important is 134.75 to 135.02 on the downside, and probably 136.75 on the upside. So I said 135.70, 136.50. Now, one thing, you've seen me mention this before. I'll mention it one more time. This is one of something I keep getting such great feedback. I'm going to point out again. These are 20 common sense trading tips that I use, I developed. I'm passing it on. All you have to do is click on this link right here. It's embedded. You'll see it's 20 common sense trading tips. You're going to come away with something by reading it. So that's it. Jay Meisler toning out. Click on this link. We will touch base again tomorrow.